Okay, welcome to our second QFAA interview, and today we are very honored to have our second guest, who is Simon. So welcome, Simon.
Thank you very much.
Thank you for being our guest this time. So let me briefly introduce Simon. Simon is our alumni who is actually the second batch,
Yes,
right?
the second batch.
He graduated in 2008.
2008, yes.
So that means our first batch of graduate was 2007.
Yes.
Right, so has been many years. Let's not count the years. So let's begin with some introduction so that our audience can learn more about you. Maybe tell us where did you grow up and where did you went to school, and do you have family, children, basic?
Yeah, sure. So I, like you, I was born in Hong Kong. I lived in Nanking until my graduation from university. So my kindergarten, primary, secondary schools are all in Nanking within walking distances. And then in 2005, I went to UST. Back then there were only 3 years of university, and I graduated in 2008. I have 2 kids. Elder daughter is 6, younger son is 3.
Wow, okay.
I think you have 3 as well.
I have 2.
So you have 2 as well. Yeah.
Yes.
Okay. Yeah. Similar.
Yeah.
Yeah. That's pretty much.
Okay, that's good. Okay, so I think when we look at your journey after UST, you basically just work for like very few firms, and your latest job actually you spent there for 13 years. That's very long time. So maybe tell us a bit of your journey after graduation.
Sure. So my first job was with Long Only. It's a big institution. So after my graduation, I was doing risk management in that Long Only. So basically, the way Long Only works is as the name implies, they only buy stocks without shorts in the portfolio. My job was to help do risk management for different portfolios within the firm. So for example, within Long Only, there are different mandates. Some may have a China mandate, some could have the more regional mandate like MSCI Asia or MSCI Asia is Japan, that kind of mandate. And within each fund, there is usually a benchmark. So for example, if you invest in China fund, your benchmark may be Hang Seng Index or MSCI China, FTSE China. And the job that we do is to see, and normally within each benchmark, there is a certain weights for different stocks. So for example, just for argument's sake, it may be Hang Seng Index may have 10% in Tencent, and then 5% Alibaba, 3% HSBC, etc. And the work the portfolio manager does was try to beat the benchmark.
Sure.
And the way you beat the benchmark, you try to be different from the benchmark. That's versus tracker fund. If you do tracker, you just try to match the weight of the benchmark, and that's it. But the way Long Only works, they try to beat their benchmark. And because of the weight, because of the fact that they try to beat the benchmark, the weight of their portfolio will be different from their benchmark.
Yes.
So there could be some overweight in certain stocks and then underweight from certain stocks. And then the way what we do is try to measure their tracking error.
Sure.
How much tracking error because usually within each portfolio, there's certain so-called restriction as to how much tracking error you can have versus the benchmark. What's your overweight in terms of the sector, and what's your liquidity profile, etc. So for about 2 to 2.5 years, I spent in the Long Only doing risk management.
Sure.
Preparing the materials for the CIO to do risk meeting for the portfolio managers. On top of that, also because under the managers, there are also many analysts responsible for different sectors.
Sure.
So you have analysts maybe for China Internet, and then for Japanese bank, Korean auto, etc.
Sure.
And part of my job is also try to measure the performance of the analyst. So for example, one day certain analysts may make a call to, let's say, overweight Tencent for the Chinese internet team, and then the other analysts in Japan may have an underweight rating on Toyota, etc.
Sure.
And then our job was also to measure how accurate their call is. so that the portfolio managers can like see how good or bad the analyst is and see if they want to follow their call.
Sure.
So in a nutshell, the job was to, first of all, do a risk management for the portfolio managers and also try to measure the performance of the analysts.
Got it.
Yeah, so that's on the buy side. That lasted about 2.5 years. And then there was an opportunity for small hedge fund. That was night trading, so I have to do 9 hours from about 6 p.m. Hong Kong time.
Wow.
And
US trading.
Yeah, Europe and US.
I see.
And that lasted until US closed. So it's better in summer. Summer, US closed 4 a.m. Hong Kong.
Yes.
But when daylight saving is off, it's 5 a.m. Hong Kong.
I see.
Yeah, so that wasn't easy. That lasted about less than 2 years, 1.5 years. And then that's my current firm.
I see.
It's 13 years.
Okay.
Yeah, so when I joined this firm, it also do light trading for about 3 years.
Okay.
And then the portfolio manager left and I was promoted to take over the book.
I see.
Yeah, so yeah, that's brief history of me. So as you can tell, my entire career has been the buy side.
I see. That's great. And what asset class do you specialize in these days?
Mostly equities.
Mostly equities?
Yes.
Okay.
Mostly equities.
Okay. But then you're also familiar with like the fixed income strategies because I think you work in like a multi-asset.
Yeah, I mean, I don't do fixed income per se, but I have like some knowledge of it.
Got it.
And in addition to just equities, in some cases I may have some equity options.
I see.
Some FX for hedging.
Sure.
But I would say 95% of it is in equities.
Got it.
Yeah.
Okay, so today actually I think for our audience interest, we would like to focus a bit about the multi-strategy hedge fund. As we all have learned from the newspaper, this type of hedge fund has been very popular.
Yeah, they've been quite popular.
Gathering asset over the past 10 years. Maybe from your experience, why do you think they became so popular?
I think from a diversification perspective, that provides a good vehicle for big institution to. It's like a one-stop shop where you go there and you have everything.
Sure.
Fixed income, commodities, equities,
Sure.
Options. So you go there and then you have different strategies under one umbrella, and they're diversified. So whether the stock market go up or down, your multi-strategy fund should be able to deliver a stable alpha. So I guess that's why they are so popular, and also the result also back up their argument. But barring this year, I know this year is a little bit tough for the multi-strategy fund, but if you look at a longer perspective, they have been doing well over the last decade or so.
I see. That's fair. And how is usually this type of multi-strategy structure? Like what kind of common strategies do they put it together to call it like a multi-strategy fund?
So they have fixed. So I think the way I understand, they're under different asset classes, there are different strategies. So for example, for fixed income, you have you could have convertible bond arbitrage. Well, there's an equity component to it as well. You could have so-called basis trade.
Sure.
So the basis trade, I think, in case the
audience just blew up recently.
Yeah, they just do government bond versus futures. There are also some credit indices,
Sure.
Like high yield versus IG investment grade. But the idea is that within that, each of the asset class, the idea is to be market neutral, such that whether the market is up or down, you can always generate alpha. Even the basis trade, right? You try to like long the bond and then you short the futures, and your idea is to wherever the market does, you always have the basis, the small basis that you earn irrespective of the market direction. unless it doesn't work. But that's the idea. So you have that, and then equity. You also have people doing, for example, event-driven merger up, fundamental equity long short, people doing quants. Also, for you have guys doing options versus the underlying, try to have a view on the ball. And commodity, I think similar to the basis trade, you may also have cash futures relationship kind of thing. So I mean, just a collection of strategies where it's diversified such that in theory you should always have a certain positive alpha irrespective of the market directions.
And also uncorrelated.
Uncorrelated, exactly.
Okay.
Well, it's uncorrelated until they are correlated. For example, like recently, but supposedly they're uncorrelated.
Yes. How is this part of the world in Asia, the multi-strategy, different maybe compared to other regions in your understanding, or they are pretty much the same?
I think it's pretty much, as far as my understanding goes, they are quite similar. Maybe in, for example, Singapore, there are more macro funds or macro strategies more popular in Singapore.
Sure.
Hong Kong, China maybe more on the equity side.
Okay.
But that being said, in terms of, because the way this fund is set up, they are global, right?
Sure.
So they have office in different parts of the world.
Sure.
So different parts of the world just help do certain strategies for this kind of multi-strategy fund globally.
When they work as these different teams inside these multi-strategy funds, do they actually collaborate with each other or pretty much working very silo?
I think it depends on the firm. For the big ones, the way I understand is pretty much silo.
Very much silo.
Yeah, and the reason is that they don't want, for example, if you have, let's say, equity long short, right? If you have, the idea is that by working siloed, they have different view on certain stocks, so that if one is wrong, the other guys could be correct, so that's, in aggregate, the fund could still perform. But if they all cooperate and everyone have the same view on, let's say everyone is buy, for example, Apple, and then if something goes wrong, then the fund could hurt very badly, right? So the idea is to have independent teams not really cooperating with each other, such that more often than not, the majority of the smart people will prevail, and then the fund will perform well. That's the idea. I mean, that's also a legitimate argument, but whether it's good for the PM or the team itself is another argument. But from the firm perspective, if you have individuals working independently and who are supposed to be smart, then in aggregate, they should perform well for the fund.
Yes. And that's why they're uncorrelated, because you also need to cut off communication. To improve that.
To make sure not just the strategies is uncorrelated, but within the strategies, they are also uncorrelated.
Sure. Interesting. Okay. So this is just one part of the bigger hedge fund industry, right? But then on a broader sense, what are the key trends in the hedge fund industries if you look forward maybe 3 years, 5 years from now?
I think multi-strat should still be a popular strategy. Like, of course, this year, at least for now, it has not been great, but over the long run, they have proved themselves to be quite popular. So I think they should still thrive. For other strategies, it may be more tough because for let's say for a single mandate fund, it's hard to compete with the multi-strat. But that being said, there are always some, one or two star managers. Yeah, exactly. And I think the general trend is still more towards passive because they are more economical and have greater liquidity profile. You want to exit, you can always exit easily. While for hedge fund, there are always certain gating. But that being said, there are always some opportunities in the market. I mean, this one is always hard to predict. It's also part of the U.S.-China relationship. Right?
Sure.
If, for example, because the big money is still in the U.S., so if the investor from the U.S. They face restriction to come, then that could be difficult as well.
I see.
So I think in general, on a relative basis, the multi-strat should still do okay versus the other parts of the industry.
Got it. And just you mentioned about tariff. How do these U.S. and China tension maybe impact, say, the hedge fund industry, say in Hong Kong or in Asia? Do they get less funding? Is the funding become like an issue, or like just this part of the world becomes more difficult to invest?
I think it could be more difficult for U.S. managers to invest in single mandate Chinese managers because, as you said, because they could face restriction themselves. I mean, certain Chinese stocks like SMIC, China Mobile, they were also put into restriction where U.S. investor cannot invest altogether. So it becomes, if you are single mandate China managers, it's a very hard sell to U.S. investor. But if you are multi-strat funds where you invest globally across different share classes, that could be an easier sell.
Okay, so generally still a bit tougher.
Yeah, I would say a bit tougher.
I see.
But that's why I said like the multi-strat should still be okay because they have different. They invest globally across different share classes. So the parts where you face restriction as part of the global mandate is very small.
Sure.
Versus if you just do like China equity long short, like this is like all the restriction. This is like all your mandate, and it becomes very difficult.
Yeah, totally fair point. Okay, so I think that's a very good discussion. And next, because you manage the portfolio for a long time, so it would be great maybe to hear your thought about how like what are the good traits that make a good PM or good investor in general.
I would say humility.
Humility
is probably one of the most important things because in our world, I'm sure you know as well, we always make mistakes.
Yes.
Right? And when we make mistakes, I think the idea is to when you keep your winner and you cut your losers quick.
Yes.
That's how you keep in the game because I mean we always make mistakes during our career and even during different trades. And just when you make a mistake, just have the discipline that you admit it, and then you just cut it quickly, move on. I know it hurts sentimentally. Say, oh, I mean, I've done so much work.
Yes.
I'm so confident with it.
Yes.
And then it's sometimes you're emotionally attached that you don't want to admit it, and then you keep it, and then lo and behold, you keep losing and losing, and that's not great. So I guess from a like emotional perspective, have the humility to admit you made a mistake.
Yeah.
And then just cut it. Even like I listened to some of this and even Roger Federer. You know who's Roger Federer,
Yeah.
right?
Of course.
Tennis
Player.
Yeah, he's like the best tennis player ever.
Yeah.
Do you know what is his percentage points win in his career?
What?
Points win.
55.
Oh, very close. 54. 54 as well. Very good.
It's already very good because if you play 1,000 games or 10,000 games, that five extra point makes a huge difference, right?
Yeah, exactly. So, but the idea is that even the best tennis player in the world, he only have slightly better than 50% chance of winning every point, right?
Yeah.
So the takeaway is that even if you're the best, your chance is only slightly better than 50%. So for the remaining 40% that you fail, you need to make sure you cut it quickly and then you keep your winner and cut your losers. I guess that's the most important idea.
Do you think this trait comes from your personality or it can be trained?
I also learned from experiences. In first few years, I also struggled a little bit.
I see.
But sometimes just have to. You just have to do it, and even though it's hard, you just have to do it if it doesn't work.
Yeah. So practice makes perfect, in that sense.
No, it's in a way it's about like Yeah, I guess so. But yeah, you just practice it.
Yes.
Of course, you don't wish it to happen, but when it happens,
Yes.
when you practice very perfect, like you practice and then you try to improve. But in that case, you are faced with reality.
Yeah.
Just face of reality
Yeah.
that well, you are made a bad
Just move
choice.
on.
Yeah, just move on.
Sure.
Just, and you also and also keep a blog of my error.
Sure.
So what kind of errors
Yes.
I've done when I make it, and I revisit it every now and then.
It's great. Yeah. Yeah. I
So-
do it every year as well.
Yeah, that's why you're successful as well.
Okay, so next one, how does your daily work schedule look like these days?
So I wake up about 6 every day,
yeah.
and then I arrive office at about 7:15ish for just before Australia, Japan, and Korea opens. Well, in the winter time, Australia open before 7.
I see.
Then my day lasts until India close at 6.
Wow, okay. No more night trading these days.
There's still some night trading. I mean, during US hours, I will still log on from my home to have a look, see how things go, so have a sense how markets go in US, because both US still have some follow through for Asia.
Sure.
Yeah.
Fair point. Okay. How do you manage stress? Because this job is very stressful at times.
No, I guess because like I study in Hong Kong, right, and also study from UST, so stress
and tension.
No, it's just part of it. Ever since like for example, in my secondary school, like the last 2 years, it was difficult as well. Back then there was A level. You also did A level, right?
Yeah.
So yeah, last 2 years it was tough. And then UST, stress and tension, especially the final year where I have internship. I have to catch up the credit, because when I did exchange in year 2, I didn't do as much credit transfer. So
so you catch up the credit.
Capture credit, do internship like 3 weeks, so 3 days a week. Need to apply for lots of graduation jobs, lots of midterms, etc. So it's already very stressful. So to me, it wasn't that much stress, to be honest, versus back then. But it's, I guess, a different kind of stress.
Indeed,
but, I guess because of the fact that I was in UST, also in study in Hong Kong, that I'm kind of trained up to.
I see. So actually, a pretty good message. Being like a successful PM like you, actually the stress level is not higher than in university.
Well, no, it's still stressful if you lose money, but just have to learn to. What's bygone is bygone. You can't change it.
Yes.
So just let it go. I guess I've gone through so many mistakes that I just kind of like, okay, that's part of the process. I just admit it. That it was gone, it's gone, and then just keep doing what I should do in the future.
Great. And I guess part of our job is the manage drawdown, because drawdown happens to everyone. If you trade in the real world, right?
Yeah.
And sometimes it's out of control. How do you manage drawdown, and how do you get past it and recover?
I guess that's part of what I had said in the past. If the trader didn't do money, you make sure you cut it quickly. So because of that, the drawdown that I have faced over the years hasn't been great.
Okay.
And also like Roger Federer, I won't proclaim myself as Roger Federer, but likely my chance of winning is more than 50%.
Sure.
So over the long run, it has been a okay strategy for me.
So you just need to believe, even when you have drawdown, that over the long run, if you keep doing it, you'll be fine.
It's like flipping a coin, right?
Yes.
It's like flipping a coin. You know your chance of winning is more than 50%.
Yes.
Then just keep flipping it. Have faith in yourself that it will be in your favor in the long run. When it doesn't work, it's bad. It just doesn't work. That's the part of the game, and just cut it quickly. Let it pass. Learn from your mistake, and then keep doing what you are good at.
Yeah, it's great. I mean, great advice. But I think it's even better that you didn't have a lot of drawdown in your career.
I think part of it is also to be diversified.
Yes.
Like the multi-strategy fund, right? You don't just have one idea,
Sure.
you have different ideas, and you size it properly based on your conviction as well as the liquidity of the stock.
Sure.
So if you, for example, a stock that trade like $1 billion a day versus a stock that trade 50 million a day, your sizing will be different, right?
Sure.
So in case it goes wrong for the 1 billion,
you can exit
anytime you want.
Yes.
Yeah. So you have to size it according to there are different considerations.
Sure.
In terms of sizing the trade, your conviction, the liquidity, how much drawdown you have, and do you expect if you are wrong?
Okay, great. Do you have any advice for the fellow QFers who are working in hedge fund, or maybe they want to enter hedge fund in the future?
Working in, I guess for hedge funds, we have a saying, you eat what you kill. Basically, it's a bit different, maybe a little bit different from the sell side. So for hedge fund, I guess you have great passion and believe in what you are doing. And then if you do well, then supposedly you get what you work on. I guess for me, there isn't really that much I can advise if you are interested in hedge fund, other than be really interested in or know what you are really good at. Because especially in hedge fund, whether it's very much result driven.
Sure.
So if you do well, you'll be rewarded, and if not, you will need to find your next job pretty soon. So
Yes.
So make sure it doesn't have to be like a PM role. It could be analyst, it could be investor relation, it could be operations.
Sure.
Each side can lead to great success too. Just that you need to know what you're really interested in, believe in, and keep doing it.
Okay, that's great advice. Okay. Here comes to our last part, maybe a bit more relaxed. How is your connection with your other cohort fellows after graduation?
After graduations, because back then, as you mentioned, I'm only the second batch.
Yeah.
So
Only one more batch.
Yeah, so admittedly, other than my own batch, I didn't have a lot of connections.
Sure.
There are not that many people that I know.
Yeah.
So some of them we know each other from gatherings. Some we still have to maintain contact nowadays with my cohorts. And maybe also through you guys. You guys
Thank you.
do a good job for us to know more about different QF alumni.
I see. How was your memory like for your 3 years study in UST? If you maybe just name one, like the thing that just came to your mind straight out, what would that be?
It was stressful.
Stressful.
Yeah, it was definitely stressful. Yes, it was definitely stressful. I guess if I can give some advice to the current students,
Yes.
I would say, don't try to push yourself too hard in academics, because in the end, when I look back, what you learned from the academics versus what you're doing now doesn't really help. So I'll put it this way. Let's say every student you get a B, let's say. I would say if you spend some time from B to A minus, if you require that much effort. But from A minus to let's say A plus, it was like that much effort. So instead of spending that much time just to get from A minus to A plus, I'm not saying you shouldn't do it. You should still get an A minus or first on if you can. But if you spend so much time, then it's kind of make you a bit insular, like you're too much into your work, and then there's something I think more important, like the interpersonal connection with other students. Because nowadays, like especially after so many years in the workplace, I think the personal connection that you build is a lot more important.
I see.
So there are a few guys that I met in UST, we are still good friends, and they help me along the way. Also give some advice to them. The advice that you receive is probably a lot more important than whether you can get an A+ in a certain subject.
That's exactly right.
So my advice will be, well, it's important to do well.
Yeah.
Try to get to know like different people because along the way they could be helpful for you. For example, someone you may want to work in, for example, Morgan Stanley, and lo and behold, some of your friends will be working there, and then you can find out more from them. And that's much better. That advice is a lot more valuable to you than an A+ in your graduation report in, I don't know, Finance 222 or things like that.
Yeah.
So
that's what Angela said, right? Did Angela teach you at that time?
No, she was the program coordinator.
Yeah.
So she admitted me.
Oh, she interviewed you.
Did she interview me? I think she did interview me.
Did she give you a lot of soft skills lesson?
Yeah, of course. Of course.
I see. Actually, so I think what her advice was back then was actually quite valid, right? After so many years.
Yes.
Don't just focus about grades.
No, exactly. Don't just focus about grades. Also other aspects as well. Don't put too much time into academics. Make the best use of it. And back then we only have 3 years. That was too short.
Yeah, because we are very stressful to find a job. If you only have 3 years, that means you only have 2 summer.
Yeah, like the first year is already starting, and then second year you have exchange program, and then the third year you already need to find a job. And then, it's better now, I guess. But I wish I had 4 years too.
Okay, great. So any advice that you think the QFAA Alumni Association we can do more to help you or help?
No, I think you guys have been doing great. Like I have some gatherings, so for alumni to mingle with each other.
Sure.
More talks like that. I mean, I'm from the buy side. Maybe you can arrange someone who has been with the sell side for a long time as well.
Yeah, we'll do that. That will be the next one.
Oh, the next one. Oh, nice. Yeah. I think for the current students or the current alumni to know more.
Sure. Okay, great.
About the industry.
What do you do to relax?
Relax. Wow. That's a good question. Because I have 2 kids now, I don't have much time for relaxation myself. Other than doing exercises every weekend. But other than that,
what exercise do you do?
Running.
Running.
Just running. Yeah, 8 kilometers.
Every week.
Twice a week.
Oh wow, that's pretty good.
Yeah, Saturday and
Very
Sunday.
good mileage. Yeah.
But there are just one of those things when you have kids, there isn't much.
But I'm surprised you still got time to run 8K every week.
No,
Saturday
I wake up at 5:15 during the weekends to do the running. And then after that, you just spend time with the kids.
Yeah, daytime we are usually the driver, right?
Yeah, don't have much. Yeah, just some of those things. I guess before I have kids, I used to spend time watching movie on Netflix or doing other stuff with my girlfriend and wife. But after that, it's different. When you have kids, your life changes. So
I see.
think carefully before you have kids.
The weekend I think is more tiring than weekdays.
More stressful, yes. You feel like Monday to Friday is the holiday.
Yes,
and Saturday
definitely.
and Sunday feels like the real work day.
Real work day, totally, yeah. Okay, last question of our interview. How do you manage your own investment or your own wealth?
Well, for me, because our fund have strict compliance rules, so we can't invest in individual stocks per se. So I don't have much advice in terms of I can invest some in the fund, which I do, and certain board-based indices. But no, if I like, for example, Tesla, I can't just go buy it because it's certain restriction.
Sure.
I guess that's also one of the restrictions on most buy side, whether like they may have restriction in terms of outright ban on buying, or even if they are allowed to buy it, they have to hold it for at least 3 months, 6 months, that kind of restriction. So if you are like day trader, you feel like you can make money yourself, then you need to be cognizant of going into the buy side, because usually there is certain restriction in that regard. So I can't offer much advice because I don't have much advice.
So your money mostly in real estate, cash, or ETF?
I have a little bit in each of these.
I see.
Yeah.
I see.
Yeah.
But I guess your wealth comes from your performance anyway, so the other part is not that big important, right?
Yeah, maybe. But yeah, it's just one of those things that are restriction in terms of what you can do. Of course, real estate you can always buy it, but I'm not sure if now is a good time to buy. So.
But just say if you have like one thing you want to buy next 3 years, do you have anything in mind?
One thing I want to buy in the next 3 years, my own strategy.
Great. Just put more money in your own fund.
Yeah, my own strategy.
Okay.
Yeah.
Okay. That's good.
Okay.
That's all good. Thank you, Simon.
Thank you very much. Thank you very much
Thank
for
you.
your time.
Thank you for your